We have been in the black in positive cash flow ever since inception, since the early days, mostly because of our cash flow generation business model. We're focused. My motto was cash flow, cash flow, cash flow all the time. We have negative debt. We have showing in the cycle record EBITDA, record free cash flow generation, record revenues at the same time.
Well, greetings and welcome to our Wealthion show. My name's Trey Reik, and we're here at the SCP Wealthion Silver Conference at the Shangri-La Hotel in Toronto. We're now about 2/3 of the way through the day, and we're visiting with Alberto Morales, who is the CEO and significant shareholder of Andean Precious Metal. And I think Andean Precious is a bit unusual in terms of its structure. So thanks for being here with us today. We appreciate it.
A pleasure, Troy.
And secondly, I thought we would start, where does Andean fit in the grand scheme of the precious metal sector?
Okay. Andean was born out of a private play acquisition I did of a pure silver mine in Bolivia. This was a processing facility that had a capacity of up to 5,000 tons per day. So it's a pretty good size facility. And the situation as to why did my predecessor was literally exiting from Bolivia, it was because they had exhausted the life of mine. That meant that the runway of their own reserves was less than 1 year. But you had a huge processing plant that had a replacement value north of 250 million. So when we reviewed the possibility of a transaction, we figured out that this was a turnaround. It was literally a turnaround that could not have been done by a public company, but through a private play because of the way the analysts looked into a traditional.
Didn't check enough boxes.
They wouldn't check any of the boxes that they would actually look for in order to recommend a stock.
Got it.
So to the contrary, they would see an asset that has no life of mine, that is just going to be consuming time and energy to management, that's going to have to be shut down, and it's going to have to be remediation will kick in. So my predecessor decided to sell. And when I visited the facility, I figured out that restructuring play could have been made by converting this facility into an industrial processing complex of ore, not necessarily from your own reserves because you didn't have much, but between the time in which we apply for permitting to the government, we started to buy, not toll, buy ore from third parties. And the geological
and what's the
potential.
difference between buying and tolling?
Buying is that I look at your deposit, you're a private owner that has rights of mineral rights to deposit, and then I say, I'll buy you 100,000 tons of here at blank. I review it.
For what period of time?
Until I exhaust the 100,000 tons.
I got it. That's buying.
So I will be in charge of all the mining, of doing all the exploration, but all the logistics to get it into the mill and all of that. But
tolling is when you pick it up in a truck and you get a spread, right?
It is. Tolling is when you kind of lease my facility in exchange for the spread.
Okay.
It's like you own the land and said, no, I'm not going to sell you. I still own the metal. And how much would you charge me for processing on my ore on a per ton basis?
Got it.
Which is completely different than.
So it's literally 180 degrees.
Correct. Because the minute I shake hands with you and do a deal,
it's my silver.
It's my silver on the ground. It belongs to me. So that's my exposure to the metal. And it just happens that we have been buying ore all the way from 500 kilometers away from the plant to 20, 30, 50 kilometers from the plant. What's the relationship of the potential of the ore that we have been able to secure, grade against distance versus logistic and transportation charges? So the farther you go, the bigger the grade has to be. The shorter distance, the lesser of a grade per ton you need to have.
going back to the very beginning, is there any value to drilling the original deposit, or you're convinced there's no extensions?
No, the original deposits were oxides, but they were mostly what it's called the alluvial oxides. The Cerro Rico, it's this mountain that has been mined since the colonial time of the Spaniards, almost 500 years since the Spaniards were there a long time ago. And that Cerro Rico has probably been the biggest discovery ever found in the planet of silver, which more than 1 billion ounces of silver has come out of that. So the oxides, because this is a silver oxides, not sulfides, it's basically the Cerro Rico had the alluvial portion of it, meaning a lot of were deposits in the surroundings, in the adjacent part to the cerro. And that's what my predecessor was mining. So it wasn't a huge deposit, but it did last it for them. They commissioned the facility in 2008, early 2008. And we ended up buying it in December of 2017. So they kind of exhausted those reserves on a 9-year life of mine.
So the other part of the company is in California, and it's a gold mine.
Yes.
Can you tell us a little bit about what's going on out in the west coast of the U.S.?
Certainly. We started mining in Bolivia. However, Bolivia was in the midst of extreme leftist government. So many previous
Mr. Morales.
Yes. So many previous mining company began an exodus, and there were few mining companies left. But we saw a big opportunity, and we've actually believed that it was a workable situation. We did buy it, and our business model was cash flow oriented. So we went for a cash spread between the prices that we buy and the spot prices. And if the spot prices were up, I will pay you more for your, if the spot price go down, I will pay you less. So that new business model that we engineered for that plant allowed us to start generating a lot of free cash flow. And as we began to grow from the time we bought it, we realized that capital markets did not have a precise knowledge of the jurisdiction. As you have seen from the conference, jurisdiction is one of the most important topics as to regulatory environment, political risk, economic risk, monetary risk, etc. All these variables that you take into account. So we took the strategic decision to go 180 degrees to North America so that the capital markets will kind of dilute jurisdictional risk from a jurisdiction that was unknown. And we started scouting assets that we could buy in North America. Golden Queen being the one that we decided to pull the trigger in late 2023.
Okay, and what's the history of Golden Queen?
Golden Queen literally came from a gold deposit that was discovered in 1894 in the Soledad Mountain. That's where we are located, which is about 6 to 7 miles west of the city of Mojave, in the Mojave Desert. It's close to Lancaster, on its way to the border with Nevada. That started out to be an underground mine at the early days, in the 1800s and early 1900s. Later on, after the war and some historical events, the mine was literally closed and stayed dormant for a while. Then a private individual, a wealthy private individual who was a gold bug, decided, Jesus, that'd be a nice thing to buy, and started to try to exploit it. And to make the long story short, certainly the gentleman passed away. Their sons tried to take it public. After taking it public, they retook it privately, and it was maintained as a private asset at the time that we were buying. It was a joint venture between them, the original ones, and financial institutions in the United States.
Okay, the story's coming back to me. I remember this
Yeah.
in terms of needing investment from the family, which underlines the issue. Don't buy a gold mine as a family investment, on your own. They're too complicated to run, and you need to, have somebody behind you to take on some of that risk.
You need to build the expertise to actually take on the operational risk.
Right.
Actually.
Terrific. So do the two assets have any interaction?
We do have some interaction, not a lot, in the sense that we do share senior management and some expertise that we have in Bolivia. I mean, this is an open pit on oxides facility. We have an oxide process. We have a Merrill Crow. We have also a bigger scale Merrill Crow in Bolivia. They also have a press, a foundry, but the foundry is mostly to pour the doré bars arising from the metal into a doré bar that you can later on export. In the case in the US, we just ship it to the specialized refiners who will separate and certify the gold at 4.9 purity, the silver at 3.9 purity, and will clean up of all any deleterious metals or elements that the bar may have.
This October, Wealthion's putting the spotlight on silver with expert interviews, deep analysis, and a special in-depth report from our partners at SCP Resource Finance. To receive this report and other exclusive benefits, you can sign up to become an accredited investor with Wealthion at wealthion.com/accredited or by finding the link in the description below. Speaking of silver, Wealthion will be on the ground in Toronto for the SCP Resource Finance Second Global Silver Conference. Legendary investor Eric Sprott headlines the event alongside 15 silver mining companies presenting their top projects. Find out more in the description below.
So I'm assuming at $4,200 gold and we'll call it $50 silver, your cash flows are in an upward sloping.
I think we're thankful and blessed for this commodity cycle.
So by, let's say, the end of next year, you're going to have even more money. What's the next step for Andean?
Well, right now, as of the end of Q2, I mean, we have been one of the few companies, and I think you'll probably have too many fingers in one hand, that have maintained a very disciplined financial balance sheet resilience. We have been in the black in positive cash flow ever since inception, since the early days, mostly because of our cash flow generation business model. We're focused, my motto was cash flow, cash flow, cash flow all the time. Now that we published as of the end of June 30th, that we have just a liquidity, just liquid assets in excess of $87 million US. We have negative debt. We have showing in the cycle record EBITDA, record free cash flow generation, record revenues at the same time.
Limited share count.
In a way, yes, because there is some concentration on the equity side, as you've mentioned. But by the same token, what's our drivers, our catalyst? Our catalyst is growth. Growth organically by growing our two assets and as we have grown, as I mentioned, San Bartolome in Bolivia had less than 1 year life of mine. We bought it in 2017. We're almost at the end of 2025 and we're still going. And the company, we recently announced a 7 million ton contract with the Bolivian government. So we're working on ensuring that San Bart's going to have sufficient ore to process for the next 7 to 10 years. We're working on that. And in the case of Golden Queen, our organic growth, we recently, a couple of weeks ago, published our own exploration results, which are very, very encouraging, that we are extending the exploration drilling campaign. We've announced that. So that when it gets all combined with the future results of this last part of the exploration campaign, we have announced to the market that we're intending to update our technical reports on resources and reserves.
And when is that signpost coming?
H1. It depends on. We need to finish the drilling campaign, but I think I say H1 because we, in our mind, would like it to be sooner than June 30th of 26.
Of 26. And on the refinery side, there's no real signposts. It's just a ramp. How much capacity is there? Is there capacity there that's unused?
In Golden Queen?
No, at the
Sambart.
refinery. Yeah.
No, in Sambart, we have a 5,000 tons per day capacity. We're not there yet at full capacity, so we're also working on that. In Bolivia, we've encountered recently some economic slowdown as a consequence of lack of foreign reserves. Therefore, the importation of diesel and primary fuels have been a challenge sometimes. So we have expanded our storage capacity, our permitting to import diesel, and we're investing into increasing our availability so that we could feed our business and our logistic business. I'm just going to mention just a brief number. If you want to feed a 5,000 ton mill with 20 tons trucks, you need 250 trucks per day. So divided that by how many hours you can have in a day, and I'll tell you how many trucks we have to store. We have invested significantly in IT system to automate all that, which is literally what has allowed us to make a successful business model out of a re-engineered business plan.
And how's the Bolivian climate? I was an Apex shareholder, so
so you're familiar with the previous
I went through that downturn,
yeah.
And I actually know the guys at Crescat Capital that are running San Cristobal, which is the same mine, correct?
It is the same mine where Sumitomo came after the Apex, and took it over, run it for many years, and then Sumitomo wanted to exit for other institutional reasons. The jurisdiction, and that's when they put the facility for sale.
And they don't need you for anything?
I think they're big boys.
But they don't need your refinery. You can't help. You can't pitch in.
Well, it's they're a bit far away, and their oxides. It would need to be analyzed if their grade on their oxide is sufficient enough to carry the ore all the way to where our plant is located versus them doing the capital investments towards processing the oxides. I mean, they have significant millions of tons of oxides there.
And on a scale of 1 to 10, how has the political environment improved since Mr. Morales?
Well, I just have to say, we stay always apolitical.
I understand.
We have worked with the government of Evo Morales, after that with the government of Janine, and after that Luis Arce, and now we're having Rodrigo coming in November. So we basically have been working, and Bolivia for us has been a good jurisdiction.
The new fellow, where is he in the right, left?
He kind of is in the center to center right.
That's a good place to be.
It's a good place to be. And I think Bolivia, it's coming out of an economic downturn right now. So I think that, I'm hoping that they will take the right decisions towards incentivizing foreign investments, to incentivizing the economy, which there seems to be a trend for that. But so far, we haven't had any problems in Bolivia. I mean, mining is a difficult business in itself.
It has challenges. They need you, yeah. Can't do it without you.
And we try to work with the communities. We try to work with the government. And just as a piece of information, our plant in San Bartolome, we hire more than 97% from the city of Potosí. And that's where we spend most of our operating expenses. And the multiplier effect, which usually runs from 3 to 4.5 times the cash that you invest, because it gets multiplied as cash circulates in an economy. We have taken studies based on our ESGs and our efforts to build on the social presence there, that we account for almost between 23 and 25% of the city's GDP. So it's an important asset to maintain for the benefit of the community as well.
100%. So that's not bad. So as we look through the next 12 months, I think your business model is difficult for people to understand. You understand it, and you understand the cash flow. So for folks who are watching, what should they be looking at Andean to offer them over the next 2 to 3 years? Why do you buy Andean? Other than you.
No, thank you. But well, if you look at what we have done and what we're doing, we have changed this year the metrics. Bolivia now gets measured for the margin spreads, from the cash gross operating margin to the gross margin ratio, meaning what is my margins and my cash flow generation that's allowing. That's the way to measure that instead of the standard all-in sustaining costs or all-in cash. We also internally take those metrics as well. So what we're doing is we're showing the market how successful on generating free cash flow our company has been, how our balance sheet is getting stronger and stronger all the time, which the first question on going forward that you asked a few minutes ago was organic growth. But now we're also doing what I call the inorganic transformational growth. We are now actively looking for doing another acquisition that will also allow us to increase our footprint.
Now we're talking. And that would be, in North America?
Right now we're looking primarily North America.
Good for you.
Although we're not discounting if a good opportunity comes anywhere else, including South America as well. We're not discounting that.
Okay, and on the management side, I just thought of that as a footnote. If you buy a new mine and it's not in California, would you be looking for management synergies on the next mine, or you're not that concerned about synergies?
Well, our wish list would be that we wouldn't find them, that we would look for more synergies so we can have common mid-management, common senior management, common processes, etc. But we would be looking primarily and hoping that we will create operational synergies with our California assets.
Okay. And you have a list of prospects, or you've identified some targets, or
we're all the time we're engaged in conversations.
Excellent. Well, this has been a great update. Thank you very much, Alberto. And I would be looking to check in with you in the next 3 months to get an update on how the corporate strategy is continuing to evolve.
It'll be a pleasure.
Thank you, Alberto. Thanks for coming.
Thank you. Thank you as well for having me here.
Don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free. With markets hitting all-time highs, now is a great time to stress test your strategy and be prepared for what comes next. Thank you all for watching. We'll see you again next time.